And one company that we have heard from now is Micron. I do want to bring in Kevin back into the conversation. Obviously, KG, there was a lot of optimism around this, a high bar going into earnings. It had rallied more than 35% in the last month ahead of this report card. What are you seeing?
Yeah, you're seeing a really decent move to the upside right now. It's trading at $135. We are seeing a beat on both the top and bottom line here. When you're looking at the adjusted earnings per share for Q3, they came in at $1.91. Street was looking for $1.60, and sales came in at $9.3 billion. Street was looking for $8.87 billion here. Their guidance, I believe, actually really did smash the street's expectations. For Q4, they're looking at adjusted earnings per share at the low end at $2.35, at the high end $2.65. Street was looking for $2.01. So they beat handedly there. They are looking at sales increasing between 10.4 billion and 11 billion. Street was looking for 9.87 billion. I believe as well they are looking for around 15% gross or growth for revenue in Q4 on a quarter-over-quarter basis, which is phenomenal. And if you look at their high bandwidth memory revenue, they saw an increase of 50% sequential growth there, which is phenomenal. And this has actually been an issue for this company. They have had a lot of demand or seen a lot of demand, but their capacity has been constrained. And that's been one of the issues that we saw for this name over the last couple of quarters here. It seems like they have fixed that capacity issue. They're able to put some product into the market, maybe also aligning some of that backlog and really freeing up some resources in order to meet that demand. And it does appear that that's being reflected in their guidance moving forward here. This is a phenomenal report from Micron, a really big turnaround here. Let's see if it's going to continue to squeeze to the upside.
Yeah, HBM absolutely a key in this report, obviously allowing that faster data processing for GPUs, of course, like NVIDIA, etc., a requirement for those AI workloads. So no doubt that is impressive, as you pointed out. As far as the stock rallying more than 50% this year ahead of this report card in what some have described as hotter than NVIDIA because it has outpaced it, certainly as far as that period is concerned. I wanted just to ask you, Tom, what your thoughts were on this.
Yeah, Kevin mentioned the beats on EPS, beats on revenue, guidance moving forward. And, last quarter, that the AI high bandwidth memory revenue was over $1 billion for the first time. KG said that we saw another 50% sequential growth there. I think that's going to be key. Is this going to be one of those things that lifts all boats within AI? Because the bar was high going into this report. You mentioned the stock was up over 51% so far this year, 35% in the month of June alone. But this is a cyclical type of business. A lot of the comparables that we have from last year, they're pretty big beats on a percentage basis. Well, they should be, because this is one of those stocks that goes through cycles, and anything in memory at this point. But I think as far as the data center infrastructure build out, this is where Micron, their growth engine, is going to be moving forward. As these big tech companies continue to spend, this infrastructure gets built out. The amount of memory needed for AI is just astronomical compared to standard or legacy memory chips. So you got to take that into context. But then also the amount of memory chips that you need for handheld devices like your iPhone, it's double, triple what traditional memory was before. They've added more memory to kind of work through these workloads that they're using on those handhelds. So that's going to be key moving forward. We'll have to listen to the conference call maybe for more clarity on their growth rates and if they're sustainable.
Yeah, the devil no doubt will be in the detail. A lot of attention on that supporting commentary. As you mentioned, though, Tom, a tide that lifts all boats. That seemed to be what the Bank of America was talking about earlier today. I was listening to a conversation about while NVIDIA takes the lion's share because of the fact that it has that range of products, very much it has those knock-on effects for other companies like these. But, Kev, I just wanted to get your thoughts on something before we let you go. Positive sentiment certainly in this sector. As I've been sort of observing today, we have seen this rotation as far as the semi-software spread, which had been sort of leaning more into the softwares in recent weeks, and now seeing a bit of an unwind. How are you looking at this overall space?
Yeah, I think it's always going to kind of depend on the themes that are hitting the market. We know that when you're looking at semiconductors, especially early on and around the DeepSeek news that hit early on, you did see some pressure to the downside here. But you are seeing a little bit more of a rotation. They might be able to weather the storm if we do have an economic slowing here in the United States. This is a lot of enterprise spend that's really propping up these markets. And we have to just be mindful too. NVIDIA has the GPUs. Micron has the memory, and we have found over the last 6 months to even a year, a lot of these data center engineers, that the more memory that you can add to these systems, you don't have to be as reliant on the GPUs. So it was a little bit more cost effective, which is why they're seeing the growth that they're seeing right now. So there's a lot of optimism. I think if you're looking at the semiconductor space as a whole, the only area that still seems a little bit light and has not caught a significant amount of enthusiasm from investors is the CPU side, the personal computer, the handheld devices, those chips still hasn't really captured the consumer's attention yet. But the data center aspect and side of this whole business continues to thrive. And let's see what they say on the conference call. I'm really interested to see their guidance moving forward, not only just for the quarter, we already have that, but what they're looking at for a year out from now. And Tom is right. The comps are also going to be very skewed. They wrote down a lot of inventory last year. So year-over-year comps probably not the best metric. Quarter-over-quarter probably is going to be the better route to go when trying to measure this name moving forward.
Yeah, it seems like the AI trade is mutually beneficial here, and it's also going to be interesting to see what they say in that commentary around some of the tariffs and export controls, given their significant presence over in China as well. It's been an absolute pleasure, guys. Thank you so much.